Today, I'm going to talk about how interest rates and inflation affect closed sales of homes in Minnesota from 2020 through 2022 and where we may be headed. So in 2020, we saw a unique housing market. We saw historically low interest rates and inventory, influenced in part by the COVID pandemic. It drove buyer demand to levels we haven't seen in over a decade. Prices shot up as buyers took advantage of mortgage rates that dipped. I mean, it stayed at 3 or below 3% for months. Tons of sellers made a huge profit as home equities skyrocketed. So in summary, 2020 and 2021 were marked by interest rates and inventory, both of which were lower than anyone could have predicted. However, as the saying goes, all good things must come to an end, right? As 2022 rolled around, it was a little bit different. We saw the most aggressive interest rate hikes, especially in January. You asked, why? Well, inflation came into play. And when inflation enters the picture with increased interest rate, that changed the playing field for a lot of folks. Some buyers now qualified for less and their payment increased due to interest rate hikes. So we started seeing more homes reduce their price slightly, especially in the second half of about 2022. Don't get me wrong, based on location and price range, some homes were still going into multiple offers, but it wasn't as bad as the previous years. So returning to a balanced market is good. It's healthy for buyers and sellers. I've been doing real estate for over 20 years now. The housing market isn't crashing. We're just going through a shift, or I guess more of a correction. So if the correction continues and the Federal Reserve can control nationwide inflation rates, I would say 2023 and 2024 will return to a more normal housing market. The data shows how interest, inventory, and inflation affected closed sales year over year between 2020 through 2022.